One key focus today, and that is the euro. It's got to be because of the geopolitical risk that is currently stemming from France over the weekend, actually, just last night. It was found that Marine Le Pen's National Rally Party has actually basically won the first round of elections in France. This means that if you win over 50% of a certain region or seat, basically, then the other candidates drop out. She's at 34%, I believe, of the vote currently. And in France, it works on the basis that you can form sort of coalition governments, very like the UK back in 2010 when the Lib Dems and Conservatives came together. But in France, there's almost like a pact between the non-right leaning parties that they will come together to stop the right from getting in. However, there's a chance that Marine Le Pen could in fact form a majority. It's a small chance, but if the left decide, they don't really want to do that pact, which possibly could happen because the backlash from the French people, if there's, enough of a populist movement, which I think there is currently, they might just say, no, we kind of have to go forward for this. It's in the best interest of the people, which is what technically should happen at the end of the day. And you might think that their reasons for voting Marine Le Pen aren't valid, or they are. Doesn't matter. I don't care. What I care about is the market. And we can see how the euro has reacted. So in early trade, we had a big spike up. And this was probably because there was some confirmation of a political kind of forwarding, political progress towards the elections. Markets love confirmation, whether it's good or bad. They like to know where they stand. And so what we're seeing now is that the market went to the upside, some confirmation, but now it's coming out of all of the chatter from the French politicians, from the French media, from different commentators. And they're like, this could happen, that could happen. Market's digesting it and the euro is selling off more. There's also some narrowing of bond spread. So if we look at the Bund 10-year and the French 10-year, the spread has narrowed quite considerably, actually, over the last month or so since the election was announced right here. And so this is quite a key thing to be happening. It's really, really key. And so the way that we are focusing on this is really looking at some weakness, some instability in the Eurozone based off of this. And of course, we've got, the fiscal clamping down from the European Commission on France, on Poland, Croatia, Italy, and a couple of other countries like Hungary, which is also going to cause some euro weakness, at least in the short to mid-term, in my view, because of the economic effects. It's probably going to lead to slightly dampened growth. And so this is something that we really have to be paying attention to when we're looking at the euro. We have to be really paying attention to the background context of what is going on. And I'm so focused on this election currently because it's bringing together such a status quo change. And the thing is that markets move based on level of surprise when it comes down to fundamentals, macro and things like that. They move based on, okay, this is what the current baseline is. Where are expectations deviant from that baseline and by how much? That's what ticks up volatility and that's what causes moves like we're seeing today. A move to the upside of approximately, if we calculate, let's call that 0.5% from open to the high, and then back down, basically another 50% from the high. So it's quite the volatility that is stemming from the euro at the moment. And what makes it even more interesting is that we have spiked into these moving averages too. This is the 20, this is the 50. The 50 was traded perfectly. The 200 is just up here. And there's a good phrase, if you're trading below the 200 daily moving average, there's nothing good that can come from that market. And that is exactly what we're seeing now. We're seeing the shorter term moving averages be rejected, while the longer term moving average of the 200 is keeping that trend nicely to the downside. If we zoom out more, we can see that the euro is also facing this 15-year trend line since 2009. Absolutely key from my view. It's always been a fundamental cycle higher whenever we've been up there. This is the new cycle high. This is when the EC, which is more of the key and bigger story over the next couple of years, actually, has started to introduce their excessive deficit procedure again on France, the countries mentioned. That is the key driver of the euro's direction over this whole period. Austerity is basically the name of the game there. It's what the UK went through back in 2010, with the foundations of it being because of the excessive deficit procedure. If you need a direction, then the direction of the euro is down. There is pretty much no other way that the euro can structurally, in its current composition, get out of that direction. It is the only way for it to go. And so if you really want to make a strong probability bet, it is to consistently be selling the euro anywhere above 1.07.5. That is probably a trade that will be a money maker over the next year, 2 years. And even in the short term, personally, I think that we see a relatively fast flush down to parity again, like we saw at COVID. And by relatively fast, I mean over the next couple of months. I don't mean, the next couple of days. So there's plenty of time in FX to be able to get in. The only issue is that you've got a stomach being able to hold it and maybe trade around your position as well, purely because of swaps and things like that. The volatility can tick up really, really quickly, but then be sucked out of the market just as fast. So pay attention to your sizing, pay attention to the opportunities of where volatility enters the market and gets out, but really focus on that longer term direction of the fundamentals of the Eurozone.